Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day, first one of the week. It is August 8th. Hope you're having a great week. Pretty rainy up here in Michigan where I'm at. Hopefully it's nice weather where you're at and you're enjoying what's left of our summer. It is winding down quickly. Already in August. This year has really gone by fast. Let's take a look at Huntington Ingalls Industries. It is in the defense sector. It is an industrial stock in the defense sector. This information is from their homepage, huntingtoningalls.com. If you want to know more about them, go ahead and check them out there. HII is their ticker. HII is a global engineering and defense technologies provider with a 135-year history of trusted partnerships in advancing U.S. national security. HII delivers critical capabilities ranging from the most powerful and survivable naval ships ever built to unmanned systems, ISR, and AI/ML analytics. HII leads the industry in mission-driven solutions that support and enable a networked all-domain force headquartered in Virginia. HII's skilled workforce is 44,000 strong. A few highlights: builder of the most complex ships in the world for 135 years. So they've been around a long time. And 83 years at Ingalls. So they do have two different factions, Newport News and Ingalls there. Sole builder of U.S. Navy aircraft carriers, so they don't really have a whole lot of competition there in that particular realm. So whenever the government, our government specifically, is creating new aircraft carriers, they're the ones who are doing it. And two of the builders constructing nuclear-powered submarines. So it's just them and General Dynamics that build the subs, I believe. Exclusive provider of refueling services for nuclear-powered aircraft carriers, at the forefront of new ship technology, specialized manufacturing capabilities, and nuclear facility management. Largest industrial employer in Virginia and Mississippi, and an employer in Louisiana and Alabama. Largest supplier of U.S. Navy surface combatants, has built more than 70% of the Navy fleet warships. Builder of record. You can read the rest here. Again, they basically build out our Navy fleet. They don't really have a whole lot of competition, so it makes them uniquely positioned to continue to grow. Again, as our government sells off some of its older fleet to other countries and builds newer fleet, this is primarily who they're going to. And unless you think our defense sector is going somewhere, they will continue to be around for another 183 years, as they've been around for 135 more, or 135 currently. And again, they've survived previous recessions, depressions, the Great Depression, you name it. They've run through it and come out the other end. So again, I don't think they're going anywhere. This information here is brought to you by Yahoo Finance. And again, we're looking at Huntington Ingalls Industries, ticker HII, out of the industrial sector. Again, a defense contractor. At the close of business on August 8th, $223.09, down 1.97% on the day, which is why we are taking a look at them to see if they are entering fair value or one we should look at. Their 52-week range as low as $175.50, as high as $237.43. So definitely closer to the 52-week high than they are the 52-week low currently. A market cap of $8.934 billion, a beta of 0.67, so less volatile than the overall market. Definitely see a clear decline over the course of the day. Looks like they were around 230 to start the day. Where was their open days range? 232 to 221, so that gives you an idea of where they were at. Opened around 227. They do have a PE of 16.75, so it is getting on the higher end of the range for PEs that we really like to look at. Unless it's a fast-growing tech company, I really like to stay 15 PE or under for most of these bigger, larger companies with not a lot or fast growth. They have a forward dividend of $4.72 annually. It is paid out quarterly, so divide that by 4. It'll tell you your dividend payout, and you'll see that later. I'm going to share my shares and my cost basis for this at the end, something I'm just adding and seeing how that works with these videos as well, so you get an idea of where I am purchasing or where I have purchased these stocks that I'm talking about in the past, if it's one I own. A lot of them I cover are ones I own, because that's what I do. I look in my portfolio, see what's pulled back, and that gives me an idea of what I might want to focus on buying at the time. And it has a dividend yield of 2.07%. Not a super high dividend yield, but it is higher than the overall market. And according to Yahoo Finance, they have a 1-year target estimate of $231.13. Well, this information is brought to you by stockanalysis.com, and according to the 15 stock analysts that they have taken a look at, they call it a hold, consensus hold there. They have a low estimate of $183.82, which would be a further 17.57% decline from where it currently sits. So they see that it could potentially pull back further. They have an average estimate cost of $235.75 per share, and that is a 5.71% upside. And if it happens to hit the high that they estimate, $283.50, that would be a 27.12% estimate from where it currently sits. And lastly, we will look at, I pulled this out of my bank statement, my Ally investment account. I currently own 8.12 shares of Huntington Ingalls. It does show the dividend date here. Their ex-dividend date is 8/25. So if you bought it before then, you would get the next dividend. Their payout date is September 9th, and the amount of the payout will be $1.18 per share. I am in this is my average cost basis right here, for $190.28 per share. So as you can see, I bought it much cheaper than where it currently sits at this $223.05. That's the current price right now. And so I would not be really interested until it got much closer or even fell down below this $190.28. So for me, it is not a buy. Again, not a recommendation to buy, sell, or hold any stock. Just where I'm at with Huntington Ingalls Industry, it is one that is in my portfolio. Again, I own 8 shares. I'd love to add more to this. And if it happens to dip down here closer to this 190 or even below this 190.28 per share of my cost basis, I will add. And what that'll do, it will increase that dividend yield, which is around 2%, be closer to 2.4, 2.5, 2.6% dividend yield, and it would also increase my future returns. As you can see, I'm up currently 17.24% on this position. Even though it's a small position, I have made a couple $100, almost $300 on this position, and I would love to add if it pulls back closer to this 190.28. For me, I agree with the assessment of hold on this one, and maybe look for a further pullback, especially as things maybe calm down with Ukraine. Typically, these defense stocks do tend to shoot up whenever we're in volatile times, like what's going on with Ukraine and Russia currently. Well, that is it for this one. A little long. Again, I wanted to add a little bit there to show you where I'm at with some of these stocks, to show you they are in my portfolio. I'm not just talking about random stocks that I'm pulling out of the air. They are ones that I'm looking to own on my watch list or currently within my portfolio. That's why I'm bringing them to you. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Drop it all down below in the comment section. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and lose money, and should never invest any amount not comfortable losing. Always do your own research, best based on your situation, circumstances, and select criteria, or seek the advice of counsel of a certified financial advisor.